Let me first ask you, because of the exclusive story that we broke last night about Deutsche Bank and Commerzbank about consolidation between banks in Europe. This isn't the first report of consolidation that we've heard in the past few weeks, but it does seem just as unlikely as the others. Do you think it's possible for two European banks, even in the same country, to get together right now?
Look, I think like any well-run organization, every institution is looking at its strategic positioning and the scale and its footprint, and how does it grow and how does it expand. And so I think all the major institutions across Europe continue to evaluate. There've obviously always been more reasons not to do a transaction than to do it. Obviously, we still need to get banking union complete. We need the deposit guarantee scheme in place. We need more alignment in terms of regulatory structure. So those are all the reasons not to do. But the benefits of scale, the benefits of consolidation, having a bigger footprint, that's on the other side of the ledger. And so you're always playing these two components off. Up until now, it hasn't been the right time to enter into such a transaction. But certainly the amount of dialogue around consolidation is certainly growing. And you do get the feeling that not right now, but as we go into the months and year or two out, it does feel like the pressure for such consolidation is growing, and I wouldn't be surprised to see some. And of course, once you've seen the first move, then you see a reaction from other players, and you may see further activity.
What do you think about the German retail banking environment? I mean, you obviously have a very different business model, but you're also making moves with Marcus on the consumer front in the UK that you I assume want to expand across Europe as well. What's your take on the overbanked Germany, as everyone always refers to it?
Well, you've got to get into the local market structures, and when you look at the German, banking sector, it's obviously structured in a way that is different from the UK or the US, and everybody always focuses on the big names and the names that are well known internationally. But of course, when you dig into the local market, the share of the market that's held by the co-op sector, the savings banks, in terms of market share between those two, they're well through 60% in terms of market share. And actually the share of the domestic retail SME business that the big names we all talk about have are actually in the minority, not the majority in terms of share. And if you look at some of the co-ops and the savings, they're making decent money in this business. So you can make money here. It depends on your scale, your structure, your market access, your footprint, and how are you running your business.
Having nothing to do with the consumer side of operations, you are moving at least a significant amount of people here, I guess due to Brexit, right? I know Hugh Pill has relocated over here. We're going to talk to him later today. Really looking forward to that. But you're moving a lot of back office over here as well. How many people do you expect to move out of London onto the continent due to Brexit? And is Frankfurt your number one choice?
So we'll be moving people in the hundreds. If you want to put a round number on that, either side of 500 people will either move or jobs created, because obviously we'll hire and fill some of the positions from new hires that we make. Frankfurt is going to be our banking our banking center. We've got a bank license here already. We've applied for a broker-dealer license. And so in terms of our legal entity structure, it'll sit right here in Frankfurt. But we'll obviously have people spread throughout the continent. A big part of this push for us is to make sure we get people closer to our clients, and then we've got a holistic ecosystem around our client-facing people so that we can deliver better products. So, Paris will see growth, Milan will see growth, Madrid will see growth, and so we'll spread, people across the continent. And I know there's a lot of focus right now on how many people are going to be moved from London onto the continent. I think the bigger point, and to me the more important point, is does Europe want to put the financial services industry at the core of what it does, and alongside many of the other great industries that Europe has? Do we want to complete banking union? Do we want a complete capital markets union? Because if we really drive in that direction, Europe's financial services industry could become significantly bigger. So let's assume that we do go down that path, and obviously all parties need to come together and agree that's the direction that the EU 27 post-Brexit want to go. I could envisage us adding thousands of people to our footprint here. Way greater numbers than the people we would move due to Brexit, and those people would be hired here and hired from around the world, and we could build a very significant capital markets operation. We obviously will over time build out our consumer businesses too, and you could have an altogether different scale, but it does require banking union to get completed. It does require capital markets union to get completed, and a desire to build a financial system that is fit for purpose, fit to support financial growth across the industrial sectors of Europe and every other part of the economy that needs financial capital and resources.
So a lot of work still for Brussels to do on this, a lot of work for the EU 27 individual governments to do. My other question regarding Brexit is how can London remain the financial powerhouse, the financial capital, really, that it's been? I mean, I know a lot of banks have invested so much money in making that a hub of their businesses, but don't they also have to be prepared in case there's a hard Brexit? Isn't there a possibility that London could lose some of its luster as far as being the financial capital of one of the financial capitals of the world?
Well, let's see what the final Brexit resolution is. But clearly, under a hard Brexit scenario, the shape and form of London will change. But we should understand, and we all recognize, London was a great international financial center before the EU, and it'll be a great international and very significant financial sector post-Brexit, really under any scenario. So London will continue to be a very important focus. It's a broad-based, diversified, and whether it's our businesses, the lending institutions, the asset management industry, and of course it's international and it services many markets beyond the EU 27. London will remain an important financial centre. The question is, what sort of scale does Europe want to get to? There's a lot of discussion, and some of it is behind the consolidation stories. The size of the largest European bank relative to the size of the largest US bank. So why don't we put a few European banks together and see if we can get to the same size? I think that misses the point. The real question is, what is the wallet share? What is the scale of the industry in Europe? How do you build an industry that can really do what it's meant to do, which is to drive the financing, facilitate growth, facilitate job creation, and grow an industry as opposed to a single institution that starts to rival markets like the US in scale and opportunity.
Let's talk, though, about one single institution being yours. What's the story with Marcus? I think I read in the FT you've collected 20 billion euros of deposits so far. I think 3 billion euros of loans. What do you want to do with that business?
It's great talking about Marcus here in Frankfurt because the reason we chose Marcus is that the founder of the firm, Marcus Goldman, originally family from Germany, and so we've chosen the Marcus name as as the branding there. And obviously it's Marcus by Goldman Sachs. But when you think about Marcus, you should think about this is our step to really drive towards servicing the consumer. Over the last 150 years, next year's 150th anniversary, the focus has been on large corporates, financial institutions, investing institutions, people with significant capital to invest, our asset management businesses. And we haven't touched in a very broad way the consumer. And Marcus is about that effort to go after the consumer. So obviously there's a funding advantage. We want to diversify our funding. The firm has now grown its deposit base to circa $150 billion. 22 billion or so comes through the Marcus platform. That will continue to grow. So there's a funding opportunity. But over time, we want Marcus to be positioned to really service the consumer through a digital interface in whatever way they want to be serviced. Do they want to borrow money? Do they want to lend money? Do they want to save? So wealth management, you can think about wealth management as a platform that could be delivered through Marcus and is obviously adjacent to important things that we do. Not every product that will eventually go through Marcus would need to be manufactured by Goldman Sachs, but many of them obviously will. And we need to build it into a sticky platform that consumers come to in significant scale on a global basis, and absolutely we have global aspirations for this. And we're going down this path because over time we want it to be meaningful. But we recognize that you go through an initial investment phase. It takes time for businesses to become meaningful. If I look at my time at the firm, and as you said, I've been with the firm since the early 80s. When I joined Goldman Sachs, we didn't have an asset management business. We've grown it in terms of scale over the last 30 years to a business which contributes in revenue terms an equal amount to our investment banking business, our investing and lending business, our FIC, our equity businesses. So over time, you can grow very significant operations, but you've got to do it in the right way, with the right people, with the right systems. And of course, your client, and in this case, the consumer, has to be at the center of it.